Aloha, everyone, and welcome to Java. Thank you so much for joining me. It is Wednesday, and this is for October 4th, 2023. So, starting off with the MMRI is our favorite risk indicator. Yesterday, it went over 320 in extreme levels. We do need another level or something to see how high this can go because the markets are testing it. So yesterday, very much a down day. The stocks took quite a hit, kind of across the board. We were looking at jobs numbers. For somehow, miraculously, there are an incredible amount of jobs available. So after hours last night, also lost the Speaker of the House. I'm sure everyone has heard that McCarthy has been unseated. And just to let others know, because this is important in the United States, that's a very important position. And basically, if the President of the United States were to not be able to serve, it would go to the Vice President. And if for some reason the Vice President was not available, then the Speaker of the House would become the leader. So it's a very prime position. And this is the first time ever that's happened. So I think in light of everything else going on in the market, they did need to insert a little bit of drama, take the attention off of what's going on. So really all this boils down to the debt market. It is extremely unstable. And we're looking at the elements separately today of the MMRI, namely the dollar. The dollar relative strength and the 10-year yield are our two main measures. So one of the debt and the relative dollar strengths both advanced yesterday, and that's negative for stocks. So currently, the US 10-year is sitting above 4.8, 4.814, this highest it's been in a long time. And I put up this chart this time to show what happened with this. So we did have that spike down when we had that bit of a pullback. And then since then, it has been advancing. So currently, I just want to make note that both the dollar relative strength of the Dixie and the US 10-year yield are running into basically resistance. So what does that mean for markets is basically that they're topping. If they pull back, then it will be the green light for stocks to go again. This could happen, could not. Right now, we're going with the sentiment is mixed, bearish, in a larger downtrend, but largely negative. And so my warning for this is that with both the 10-year and the dollar hitting up against resistance, if they pull back, this could lead to a possible short squeeze. So everybody is pretty much down the other side of the boat where they're all buying shorts, they're all negative, and it would only take a little bit to kind of run them out. Then we would have the market shooting up again, even though only temporarily, but it would wash out a lot of those shorts. So for the negative side, I've got a few things that I wanted to bring out to put on watch. First off, we've got Moody's out there. They are the credit rating agency, and they've already warned that with the instability in the United States government, that they could downgrade their credit. If they do that, that would be an immense hit and could spark the major sell-off that has not happened, in my opinion. So I want to take one moment and speak about that. So although yesterday was major sell-off, it was managed and very controlled. I don't believe it was the big one yet. We'll see. If it continues and it just grinds it out, that would be one thing. But I think it's been a little bit controlled. It's just so far just basically a correction. So of the things on watch, Moody's is one. The second would be a banking company fail. And by this, I mean either a mid-size or larger banking company. So either Bank of America or Wells Fargo. Something like that were to occur, that would also create a major hit. And then, of course, we've got our favorite old time, Disease X. So if Disease X shows up, which they're already making a vaccine for, even though it doesn't actually exist and we have no idea what it is, if Disease X were to be proclaimed out and dangerous, would look like maybe another lockdown that could also make the markets plummet. Okay, moving on to the calendar. We've got mostly, a little more unemployment, PMI coming out, and a couple of Fed presidents coming out to speak. So, as always, they just kind of manage whatever is going on. And I think they say whatever the market needs to hear. So I've got a quote today from Ronald Reagan. A recession is when your neighbor loses his job, and a depression is when you lose yours. So I just like to point that out because I always say the difference between the two is only a matter of degree, both the same direction. So let's move on. We had yesterday utilities stocks got decimated by rising rates. So they did fall into a very serious buy territory. You can find some uh, pretty good utility stocks, not financial advice, but you may want to look there if you are indeed still investing or trading. XLU is one of the ETFs. So Kevin McCarthy was ousted as US House Speaker. It created a lot of drama, but I wanted to look towards this if this sparks something like the Moody's downgrade. So we've got S&P futures recovered after the losses from Treasury yield spikes, but it was not just the Treasury yield, it was also the dollar. So we had another mystery issue that happened, and just like that one plummeting time, it was the Bank of Japan. So they hiked their bond buying and then they were very quiet about it. They didn't come out and say if they had intervened, but we know it was the central bank had to come in and buy their bonds because no one was buying them. So the only one with that much money, and now they're not talking about it, it's pretty sure that they are. As far as oil, we had a reiteration from Russia that they do plan to curb oil exports at least through December, and then Saudi stepped in and said that they would maintain their production cuts as well. So same chokehold on the supply of oil from Russia and Saudi to continue. So oil pulled back. I expect it to continue to go up into the end of the year. That will also increase inflation overall. A couple of things I want to hit with labor. The US job openings, it was ridiculous yesterday. So we'll see if those numbers get revised. I don't tend to believe that they're accurate from whatever reason you want to say. And then I had this small story that kind of plays into the retail, says that revenge travel is dead and what comes next. So basically, I've been talking about this. It falls into the discretionary spending. And travel was a huge one coming out of COVID. Everybody wanted to go everywhere, but that sector is falling down also, right behind the Airbnb and the other kind of bubbles, if you will. It's more on the labor. We have GM, so the United Auto Workers, the UAW strike continuing. So GM is kind of playing their hand. They're laying off another 163 workers and then blaming it on the strike. I think the company is getting a little stronger and they want to kind of cut their costs anyway, and this is creating a good excuse. So we've also got 75,000 union healthcare workers, Kaiser Permanente, that are set to strike today. So this is across 6 states, and we'll see what this does. It's also going to have some issues. We'll keep an eye on that as well. So if you don't mind, you could take a moment and just hit the like button. I would appreciate that. It helps out the channel tremendously. And then going in, I've got a couple of lava updates. So most everybody knows that they're going to conduct a nationwide emergency alert test, and this will happen today at 2:20 in the afternoon Eastern Time. So in alignment with the markets at 2:20 in the afternoon. And if you think anything of this, don't want anything to go on, turn off your phone, stick it in a metal box, wrap it in foil if you want to, whatever that would keep it from getting this signal if you so desire. They will continue for 30 days. So if you turn your phone on within 30 days, you're apt to get the signal as a test. Now, there's a lot of ideas going on about this. I think this is just a test, possible linking on the back end. There is quite a bit of 5G structure, if you will, being built not just in the United States, but abroad, and it is all federally controlled. I have something larger that no one is really paying attention to, and this is actually that it is tied into travel. And how is this? 5G is being forced upon all of the airlines, all of the travelways. If you have experienced airline delays, chances are it could be related to air traffic control, because they're all being pushed into this new system. So between that and then also moving to the no passports, going with all biometrics, as a lot of them are, and you don't have a choice to go around these. I think there's more on this, but anyway, that's all I'm going to get in for today. If you have any thoughts on that, please leave it in the comments, and I'll probably go over a little bit more of that later. But as for now, I want to wish you all a green trading day, or just a wonderful day in general. One more time, we're looking for a possible green, kind of a dead cat bounce type thing. If we do, could be a strong short squeeze, so beware of that. But in the overall trend after this, after today, to continue. So we'll see how that plays out. Nobody knows for sure, including me. And until I see you all again, my friends, stay free.